Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, glad to be back.
John, a couple of months back, a junior called NV Gold, which you introduced to Discovery Watch nearly a year ago, jumped fivefold from 20 cents to over $1 a share, but today is back below 20 cents. What was the news last week that the market did not like?
Predictably, the results came back near empty in terms of gold mineralization. But what really bothered the market was the company statement that reviewing the geochemistry of the mineralization within these carbonate rocks that they had intersected that were altered is that they were not the pathfinder elements associated with a Carlin-style system. Instead, it looked more like one of those younger epithermal systems such as the Midas and Hollister gold-silver vein systems that are associated with the Northern Nevada Rift system. Now, those aren't shabby deposits in their own right, but in the case here, where you're drilling deep under 400, 300, 400 meters of rock that's worthwhile, looking for a very structurally controlled system that isn't going to be anywhere near as large as the 20 million ounce Twin Creek system, this is a big disappointment. So the reason the market got excited in the first place is that Quinton Haney, who's a director of this company and has done some work in this area through a prior company called Evolving Gold, had done a reconstruction of what might have happened to the geology across the valley where the 20 million ounce Twin Creek system sits under gravel cover, and to the south-southwest is the Turquoise Ridge system, which is also a high-grade Carlin-style underground mine operated by Barrick. Twin Creeks is operated by Newmont, and he figured that this system, which would have been laid down somewhere between 45 and 25 million years ago, was ripped up during that basin and range stretching 15 million years ago, which created those big, long basins in Nevada and artificially dropped down and obscured possibly half of Nevada's gold endowment in the form of these Carlin-style systems such as Twin Creeks and, Carlin itself and Cortez Hills and Pipeline and more recently Gold Rush. And so he said, this area over here is where all this movement post during this basin and range stuff would have deposited half of this system if indeed it existed. And so the company had gone in there and done Bleg sampling, which looks for metals in the stream sediments, and they did come up with a gold anomaly, and figured it was, of course, on top of much younger volcanic cover rocks, but the idea was that there could be a Carlin-type system, perhaps the missing half of Twin Creeks, buried in the limestones underneath this layer of younger volcanic cover rock, and that later heat and stuff would have remobilized it and leaked it to the surface. So Quinton marked an X on this treasure map, and that caught Eric Sprott's attention. And so the money went into it to start drilling. They got encouragement. They got carbonates. The market really got excited and drove the stock up to $1 during the deepening of the hole when there was all this talk about the Comus Formation being present in this rock. And it's, of course, important because if Quinton was right, you need to have the Comus formation there to have the missing half of Twin Creeks. Now, you don't need Comus Formation to have a Carlin-style deposit. All you need is properly prepared carbonate rocks that have been in the path of the right fluid flow, fluids that have been enriched with with gold and the toxics associated with that type of deposit. So the company got its first sort of setback in the market when it admitted that it didn't really know that this was Comus Formation, but they had sent samples to a university in Indiana for what's called a bug report, where they look at the microfossils in it, identify them, and then match them with the known sort of age ranges and species of the other formations that have already been studied to death in places like Nevada. And we won't know until the end of June whether or not this is Comus Formation. But the market's brutal reaction last week was the assessment that, well, even if it is Comus Formation, we're not seeing evidence of the Carlin-style fluid flow that created this alteration. It was something else, younger, that doesn't create the big type of deposits that we're seeking as part of this Nevada 2.0 hunt. And it's interesting that the kind of seeing the market react so positively to this, it's part of this interesting equation out there where if Quinton Haney thinks it is so, and Eric Sprott decides that he can make it so, the market thinks that it will become so. So this was a sort of a big setback to this whole approach. The target, in my view, was always somewhat of a stretch because it's really hard to prove that the geology did get rearranged like this. And Bragg isn't the best method for establishing whether or not there is a Carlin-type system below. There are better targets out there right now. Mark Creasy's S2 Resources is drilling Renaissance Gold's South Roberts project, where they have an enzyme leach database supporting the possible presence of a Carlin-type system. And then, of course, my favorite is Nevada Exploration itself, which uses hydrogeochemistry to generate groundwater anomalies that include gold as well as all the other elements, and they have several such plumes in the Grass Valley area and in the Kelly Creek Basin area. They haven't yet had this phenomenon where an Eric Sprott has discovered the company, seen the data, and says, wow, this is my specialty. This is compelling empirical evidence. All it needs is my attention, my capital to start making it happen. And once I do, that will make it so. If and when we see a big Nevada 2.0 discovery by anybody in Nevada, proving that there are these completely blind, world-class deposits, not within the checkerboard of Newmont or within the sort of holdings of Barrick and Newmont, that would blow Nevada 2.0 exploration wide open.
We'll have more with John Kaiser right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're talking with John Kaiser. John, Pact and Gold has become a new market darling during the past couple of months after acquiring majority stakes in multiple properties in the Pilbara region of Australia. Pact and Gold has nothing to do with Novo Resources or Quinton Haney, but it has attracted Eric Sprott as a significant shareholder through a recent $5.5 million financing. If Quinton Haney doesn't think so, can Eric Sprott still make it so?
Well, I don't think it's really a case of Quinton Haney doesn't think that these other properties have potential. When I was there last summer with Quinton touring the area, and he was showing me the vast scale of the distribution of these nugget-bearing conglomerate units, and he was talking about wanting to acquire this property still and that property still, I really got the sense that he saw enormous regional implications. And that makes sense in the context of his precipitation theory, where he argues that this very early Archean gold wasn't formed through some sort of hydrothermal events driven by an intrusion, pushing hot fluids through the rock and depositing gold in cracks here and there, as is the way that most gold deposits have since been formed. His theory was that there was this transition period where when organic life emerged and engaged in photosynthesis and started generating oxygen in these shallow lagoons in these very early primitive continents, gold was much more dissolved in the water than it is today, and that this sudden eruption of oxygen into these shallows caused gold to drop out of solution, to precipitate as tiny grains, possibly growing onto each other within these giant algae mats in these lagoons. And of course, that most of his theories have been about South Africa's Witwatersrand Reef and its enormous reefs of this very fine detrital gold, which clearly has been transported in some way. And what he saw in the Pilbara was something different from what we are seeing in South Africa, because in South Africa you do not have these large nuggets. And so the idea was that maybe we were much farther upslope on this old continent, on the Pilbara, than we were in the Capval Craton. And there's two theories out there. There's the Valbara theory, which shows that the Pilbara was actually attached to the Capval. But then there's also the Ur theory, which shows that the original continent back around 3 billion years ago was this very elongated body, and that Capval was at one end and Pilbara was at the other end. And while globally the same sort of conditions would have been present everywhere that there were shallow lagoons, sort of marine basins, tectonically they had completely different histories. So the theories kind of emerged that there's something like WITS, except possibly bigger and better because it has preserved the upslope portion that's now missing from the Witwatersrand Reef system. So at the time, the big story with Nova was that they had 10,000 square kilometers, 7,000 of that staked, mostly in the western part of the Pilbara, where they simply went southwards, all the way until the Hammersley Basin takes over from the Fortescue. And there the land is all owned by the iron companies because they got their big iron mines down there. But the theory was that what was poking out at places like Purdy's Reward and Comet Well was just the beginning of a giant lateral conglomerate unit, which happened to be hidden underneath the Mount Roe conglomerate. And all the historical work in the on the Pilbara had always targeted the Hardy Formation, which lies above the Mount Roe basalt and below the Kailina basalt, because that was kind of similar to what was going on in South Africa. So Quinton got pretty excited and wanted to own it all, and I kind of thought, well, if what you're talking about is true, you're crazy and being greedy, wanting all this other stuff because you've got all this downslope potential. So, last year it was pretty exciting. We thought we were in the beginning of huge, huge new gold discovery, a play to rival that of South Africa over 100 years ago. And part of this was created by evidence of fine gold within the initial bulk sample. Yes, there was a good chunk of the majority of it was nugget-type gold, but there was also a fine gold component. And obviously measuring the quantity of nuggets in rock is going to be a statistical challenge and one that's going to cost a lot of money because of the large-scale sampling needed to come up with a reliable estimate of grade. But the possibility that there was also a WITS 1.0 style finely disseminated component to this that could be used as a marker for the presence of the nugget gold that you could test by drilling a small diameter core hole and assaying it for the 2-3 grams, 5 grams of fine gold in it. Then you could very quickly map out huge sort of segments of this pre-Mount Royal conglomerate unit all the way down, which is why Noble stock went so crazy all the way up to $9, because if this was actually the case, this would end up being a $100 plus stock because of all the land that it owned. But when they, in November, the stock cracked, when they put out news that the fine gold was not evenly disseminated within the conglomerate unit, that it was in fact a halo around the nuggets caused by remobilization of gold during the last 2.8 billion years, that these conglomerate units have sat there doing nothing. And that really killed on the spot the hope that there would be a fast-track way of proving that there are these giant sheets of mineralization with varying grade underneath the Pilbara, between the basement, the 3 billion-year-old basement, and the 2.83 billion-year-old Mount Royal basalt, which has basically shielded this from any sort of erosion beyond that little window when this stuff was first formed and locally shuffled around. And then, well, that was bad enough, but they did have the large diameter drilling strategy where they were collecting these meter-wide samples. But then they came out with the bad news that collecting these large diameter samples, we could not match the results, the material recovered at surface, to the exact horizon that it came from. And this is critical because it was starting to become apparent that the gold nuggets aren't evenly distributed within the conglomerate unit, that it sometimes is in certain levels. In fact, it was often showing up to be close to the basement rock. So if you couldn't match the grade you were recovering from the sample, the method would be useless. And then came the further bad news that these little pits that they were digging at the surface, collecting 300 to 600 kilogram samples, it appeared that the distribution of these nuggets, and these are quite large, these are unusually large nuggets. We're not talking about little flakes. We're talking about kind of corn flakes that you get out of a cereal box. They were too dispersed to allow small samples like that to properly measure the presence of them. So the new strategy that they've been pursuing since February, March, has been to dig big pits where they collect these 5 to 7 ton samples. And they're over a month overdue in giving us grades. They did put out a news release a month ago showing us, giving us photos of all the gold nuggets. And if you kind of do an eyeball weight measurement of that, that could be a pretty good grade for that sample. But the market wants to see a grid of sample points, and they want to see that the gold grade doesn't vary too hideously, and they want the statisticians, when they look at all that, to tell us what is the spacing between these pits that we need to be able to have a reliable resource or grade estimate for this conglomerate unit, so that we can start building the basis for an operating mine. And this is the critical news that the market is waiting for right now. And there's been a groundswell of optimism, and I'm not sure which came first, the optimism or the movement in the stock price. Noble is now at the highest level since it first since before it first put out the bad news about the fine gold being confined to a halo around the nugget, which meant that the fine gold itself was just a nugget effect. And so now we're waiting for these results. The stock's trended up. There's no information in the public domain for people to suddenly become optimistic. Earlier in the year, there was a lot more optimism, like when NV Gold was rushing up to $1. We could sort of feel that things were kind of bearish for the junior sector. But there was still hope, this is going to turn around. It could turn around tomorrow. But in the last month or so, the realization with the, sell in May and go away has sunk in that we are in a bear market and there's no obvious reason to expect a turnaround. And in such a market, nobody is an optimistic hero just because they want to be an optimist. So somebody's been buying the Noble, and it hasn't been because they have a keen desire to lose money. The other interesting thing that happened, Novo made a decision to shorten the 12-month hold on the 4 million shares it issued to Artemis last year to lock up the deal on Purdy's reward and 50% of the conglomerate gold potential of all of Artemis's holdings in that sort of northwestern part of the Pilbara. And that was still supposed to be, take another 4 months or so. But Kirkland Lake wanted to buy Artemis's 4 million shares at $5 for $20 million. And they asked Novo for approval for this. And so you ask yourself, okay, why would Novo grant approval for this now? Why would Kirkland Lake, which is the largest shareholder of Novo and already has $80 million into its stake, why would it want to put another $20 million in at this stage when there's still uncertainty about whether the grade's going to end up just being below the threshold where even strip mining this stuff at surface is not going to be feasible? Why would they do this, especially since the relationship between Artemis management and Novo management has been a little frosty at times, and since Artemis only appeared to have about maybe $8 million left at the end of last year, so getting $20 million now for its Novo stock, this is a big windfall to them. They don't have to keep their dilution treadmill going. So why was this happening? And so there's a feeling out there that news is coming, which is going to signal game on for the Pilbara. But game on for what? And this is where Pacton's recent acquisitions become very interesting. Because one of the things that Quinton was staking everywhere during the early parts of last year was everywhere that the basement transitions to Fortescue Basin rocks, and obviously the Mount Rose is going to be sitting there protecting the conglomerate unit. It's not going to be visible everywhere. But if what was going on at Cometwell and Purdy's Reward wasn't just a local type of a thing, that it was actually regional, and all the anecdotal evidence we've seen of nuggets being found all over, like by the Grays in the Loudon's Patch area, all over the place. It clearly isn't the case that Cometwell and Purdy's Reward is the focus of some sort of mountains that used to exist upslope, in which there were lots of good gold veins one day, and that got eroded in the gold channel down the tributaries and into the river system and dumped into the marine delta environment. And it was interesting, sometime late last year, Quinton Haney changed his sort of story. Instead of talking about, yes, this is clearly alluvial, and here's a picture of Nome, Alaska, and everybody's scratching their head saying, yeah, okay, yeah, well, yes, that's what it looks like, how it behaves in the delta of a river, but Nome, everything comes, in Alaska, it all comes from pinpoint hydrothermally in place systems, the complete opposite of what Quinton has always been arguing. So Quinton kind of has gone quiet on the science theory, because I suspect his handler said, you're helping all these other guys like Kaiser and these juniors that you don't have any stake in get traction out of what you are doing here locally. And the Pact and stuff is not part of Quinton Haney, but Eric Sprott has backed it. The management has, it has decided that we want to own all these ribbons, because the next stage of the story is not the downslope. It is what you can figure out where the conglomerate unit daylights. Because the bigger question of, even if the grade is there, if you have to go through 10, 20, heaven forbid, 100 or 1,000 meters of garbage rock atop to get to that several meters of gold-bearing conglomerate, what is the cost going to be of that? And if the spacing ends up being 25-meter type spacing before you can start to strip mining this stuff, that becomes prohibitively expensive. And that, if that's the scenario, then most of those 10,000 square kilometers that Novo owns are absolutely worthless and can't be used in the figuring out how high Novo can go. Then it becomes a question of the thin edge of the wedge, and then you look for the ribbon you trace it around anywhere where there's the younger rocks floating on the older basement, that edge where you can get access to the conglomerate unit, that becomes a target. And we're right now in this interesting inflection point where the Pilbara play, it's been kind of in a holding pattern. And this is the reason why these couple of juniors, Arrow Minerals and Impact Minerals, these are Australian penny dreadfuls with, either billion shares or more already outstanding, trading at a penny or two. They had owned these claims for probably other reasons well before the conglomerate story broke. And the Australians in general have not really adopted this play. I mean, I was told the other day that in Perth, the warning is don't mention the Pilbara or they'll go berserk on you. And it is still this thing that they don't own. And this deal Pacton has done basically shifts 80% of all these holdings in these different areas into the hands of a Canadian-listed junior. Now, Eric Sprott has understood what, Quinton Haney was all about, and he invested in Kairos, he's invested in the Gray, and he's been sort of pushing them to do exploration of the thin edge of the wedge, chase this ribbon and basically emulate the strategy that Novo is pursuing at Comet Well and was pursuing at Purdy's Reward. But his audience, North Americans, don't really want to trade Australian-listed companies. So with Pacton emerging, and the group of claims that intrigues me the most, and which I'm recommending that, yes, we adopt this as Discovery Watch, they're all in and around that area to the east of the northern Pilbara area where Noble has claims, where De Grey and Kairos have claims. Those are going to be interesting properties. They picked up other stuff, more recently picked up stuff in the Marble Bar area. That stuff is where Quinton originally was, but where he no longer thinks it really is as prospective. He thinks it's far more distal from where all the action really is. So the emergence of Pact and Gold as a new market darling, premised on good news coming from Novo in the next 2 to 4 weeks, confirming that the distribution of the nuggets within this Fremont Row conglomerate is good enough that we have maybe 5 gram per ton average grade or higher, where we can start developing these exposed segments while we figure out some way of cost-effectively measuring where it all is farther downslope. This is the story that's waiting to get the green light from an upcoming news release.
We'll have more with John Kaiser right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with John Kaiser. John, some of the people involved with Pact and Gold are also involved with another company called Bluebird Battery Metals that recently came alive in the market. Does Bluebird deserve to be a Discovery Watch Junior?
I believe that it does, both intrinsically within its own right, the new story that has developed, and also because of the overlap with the Pact and Gold group. Now, Pact and Gold, it has the potential to become a viral type story because people understand the big picture Pilbara story. They understand what's at stake. They see the market skepticism. There's a sort of Novo has this huge valuation. These other little juniors with also thin edges of the wedge. Any one of them could be equally as good as Comet Well. those companies have a fraction of the valuation. But Bluebird Battery Metals' focus is different. The people overlap is that Peter Ball is the CEO and chairman, and he's an advisor to Pacton, and Al Stewart is the president, and he's also a director of Pacton. But the common denominator is Lee Hughes, an Australian, who has become the finder and deal maker for all these deals. He is responsible for the acquisitions that Pact and Gold has made in Australia, and he is also the finder for the new flagship project of Bluebird Battery Metals, which is called the Cane Grass Project. Now, it's also in Western Australia, but it's much farther south, near Mount Magnet. Its property covers the southern end of a north-south striking pyroxenite unit that runs for about 40 kilometers, and they maybe have about 15-20% of that. And it is on the edge of a very large 2.8 billion year old ultramafic intrusion. It's a layered gabbroic system. It's even older than the Bushveld, and it has been the focus of drilling in the past to see if there are those same platinum group metal enriched horizons as occur in the Bushveld. There hasn't really been much success in demonstrating that this intrusion developed these high-grade layers of platinum group mineralization. But the focus in 2010-2015 by another Australian junior was this pyroxenite unit, which it sort of dips to the west, but it used to be near horizontal. And what it is, it would have been a flow, a magnetic flow, where the sulfides, the more denser sulfides, settled out into little pockets in the base of it, and then it got tilted somewhat, and of course erosion took it down to whatever the level is exposed. What this company did is it flew a VTEM survey, and it identified 39 conductors, which are interpreted to be sulfides, within that segment of the pyroxenite unit. They chose 2 of this for drilling. They only drilled about 9 holes, 2 in one of the targets, and 7 in the other. And they did get nickel, copper, cobalt sulfides in it, but the combined grade of nickel copper was never more than 1%, and the intervals were typically below 2%. And the cobalt grade ranged from 0.01 to 0.1%, but back in that 2010-2015 period, cobalt was still languishing at $10-12 a pound, and the electric vehicle mania had not yet taken off. So the junior gave up on this, and it became available for Bluebird Battery to acquire on relatively easy terms. They are going back in there with an additional magnetic survey and ground geophysical survey on top of all these targets. It's probably going to cost $100,000, and take 6 weeks, and then they'll start a $400,000 drill program. Select the top priority targets, drill about 12 holes, 200 meters, and what they're hoping to see is decent widths of massive sulfide accumulations where the nickel copper goes above 2%, and of course the cobalt carries up into that closer to 0.1%, so that they can prove that the grade in the right locations within this unit did get high enough to become sort of pearls on a string that you could mine with a series of open pits. So this is the big conceptual thing that they are trying to prove. We will know by September whether what the Australians originally got is all you're ever going to get, or whether indeed we get higher grades of nickel, copper, cobalt, and widths accumulations within these conductor targets. And that would be set the stage for expanded delineation drilling and calling it a discovery that isn't just a discovery that we're watching to see happen, but one that is actually unfolding. And the other project that they put into it is they auctioned the Bat property. It's in the Yukon, not far from the Canadian border. In fact, not far from the Windy Craggy deposit, which is this fabulous 290 million ton Beshi-style VMS deposit that runs 1.4% copper and 0.1% or so cobalt. And the problem with that deposit is it actually sticks out of the ground. It would have been mined open pit, and it would be acid generating, and it drains into a river shed that flows through British Columbia into the United States. So it generated huge environmental opposition, and British Columbia ended up declaring it a park to sterilize it. For this project, the Bat project, it also drains into that same watershed, so somebody might want to have it declared also a park in that area, but it is not sticking out of the ground. It was last explored in the 60s with some pack-sack drills. They got some cobalt bloom that's interpreted as possibly secondary to a Beshi-type system. If a Beshi-type system is present in this area, it will be a blind deposit, and 290 million tons of 1.4% copper probably won't be able to mine it underground. But within Windy Craggy, there was 90 million tons of 3% copper and 0.1% cobalt, and you could block cave that very profitably, and you would not be opening scars on the earth that the rain would be trying to wash the acid out, fresh the exposed acid, and drain it into the river. So it's an interesting conceptual target, but it can't become anything that we care about until next year. They'll do some sampling this year to kind of build it up as a target, but really it wouldn't be put to the test until next year. It's more a symbol of the mandate the company has adopted to show we are interested in cobalt sulfide systems. Their primary focus is going to be Australia because they believe there is a lot of nickel, copper, cobalt sulfide systems that have been overlooked because of the lower grade. It doesn't look like cobalt prices are going to come down any soon because with China's determination to wean itself off oil dependency, it's going to keep pushing for the electrification of its transportation fleet by 2025. It's committed to the lithium-ion battery. You cannot do without cobalt. So if we're stuck with $40 or better cobalt for the next 5 to 10 years, any project that can be developed relatively quickly, and Australia is compared to places like Canada, is much more mine development friendly. So their plan is to use the Kinggrass project as a stepping stone for other acquisitions that they can pull in, where they can put the sort of Canadian risk capital to work to explore these things, to maybe apply another layer of geophysics or more modern geophysics to tease targets better into focus so there's greater efficiency in tagging ore grade mineralization. This is the game plan behind Bluebird battery metals. It has no conceptual overlap with Pact and Gold, but it has an overlap of similar people, and therefore I say let's watch the Kinggrass project on Discovery Watch, see if they can deliver, and keep an eye on what else they can drag out of the woodwork and put into the company.
John, thanks a lot for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.